Good morning and welcome to session 3 of Capital Matters Sources of Credit presentation introduced by Emerge Stronger. My name is Miriam Diamande. Please remember that this presentation is going to be recorded. Next slide. Yes, thank you. So this presentation will be recorded. Questions will be answered throughout the presentation. So please use the Q&A function at the bottom of your screen. You should see that with 2 bubbles there to ask any questions that you may have. I will grab them from there and I will ask on your behalf. A couple of housekeeping rules. Your microphones and videos have been muted, so you don't need to worry about being unmuted or speaking while muted, as many of us have been doing throughout these past 6 months, but we're learning, right? Again, please make sure you ask your questions in the Q&A section of the Zoom, and don't worry, again, I will be able to grab those and monitor those while the speakers are presenting. You will have access to this recording after the presentation, which is great, available through the link below, right under the access section here, which is great. So if you do end up taking notes and you forget something, you're always able to go back and grab it there. Thank you. Okay, so Prince George's County's Economic Development Corporation, FSC First, and Bowie BIC have partnered to provide county businesses with Emerge Stronger, the ultimate resource of successful business operation and accelerator in the county and beyond. Learn more about these organizations and what they bring to Emerge Stronger through those links, and we'll be again talking through that through the presentation. We want to extend a big thank you to Pepco for also making this event possible and being a sponsor. There are actually 4 more sessions on the following topics and dates. Source of Credit, which is going to be happening October 23rd, Understanding the Lender's Language, October 30th, Contract Financing, November 6th, and Pivoting to a New Economy on November 13th. This is the best 1-hour investment you can make for your businesses. So please make sure to join those sessions and join us while we go through those with you. Okay, so again, my name is Miriam Diamande and I will be your moderator today. I am a business banker and relationship manager at M&T Bank. I've been at M&T for about 3.5 years now and absolutely love what we do. This aligns so much with what we're doing here, what we're doing at the bank, and we want to make sure that we are able to provide you guys with the tools and resources to continue to scale your business as needed. Our first speaker of the day, Kevin Swat, which is on the line today, is here and brings us over 16 years of experience as a trust advisor and CPA to emerging and mid-sized companies, particularly within technology and government contracting. Kevin has an array of services he is able to provide and help your businesses to grow. We're honored to have Kevin with us today. Thank you so much, Kevin. Our second speaker for today is the Chief Lending Officer at FSC First, Eddie Tuvin. Eddie has more than 30 years of executive market leadership and commercial lending. His knowledge in lobbying, advising, and advocating for financial institutions, including the Senate and regulatory authorities, is impressive, and we thank Eddie Tuvin for being here today. Thank you, Eddie.
Thanks, Miriam. Thanks for telling everybody in Prince George's County how old I am as well. Good morning, PG County.
No, the age has nothing to do with it. It's all about your experience, right, Eddie?
Amen.
Well, without further ado, I will be turning over the presentation to our first speaker, Kevin. Thank you, Kevin.
Thank you, Miriam. Appreciate it, and thank you for having me. Very excited to be here today, this morning. I hope everybody's doing well. It's a little bit rainy, but you know, that will come to pass, and we'll have a great session for you this morning. So very excited. We're going to touch briefly on credit reports, and then I'm going to jump right from there into talking about cash flow and understanding cash flow for your business, and also budgeting and how that really plays a role in each of the areas you've participated in so far and will participate going forward, to understanding how to finance your business and how to help your business grow and also go through, you know, potentially difficult times. So a piece of the of obtaining credit is understanding what the credit report is and what it's saying about you. It's basically it's telling a story. It's telling a story about your financial strength in terms of how reliable are you if a bank were to extend credit to you. So as we all know, we all have our credit scores, and there's the credit reports from the various agencies. And basically that report contains the history that shows what the credit reports have gathered about you. And the lenders and the creditors, like Eddie, will use that information to help paint a picture in determining whether to extend credit and how much credit, and those types of things. And it's always important that we have on the slide too, to work towards any activities possible that can help to clean up your credit report to put you in as strong a position as possible when you get to the point of needing to obtain credit. So of course that then leads to the next question. Well, what's on the report, and do you know what's on the report? It's always good to know. I know I personally am guilty of not paying attention to my own as much as I should. So just as I should, as business owners, it's important to know what's on your credit report, because you as the business owner are tied to your business and back and forth. So it has the identifying information, so your date of birth, social security, name, address. It's important to make sure that that's up to date. Any credit accounts that you have outstanding, that includes a bunch of different areas: credit cards, student loans, car loans, mortgages, any type of debt that you have. Credit inquiries, if you have applied to obtain credit recently, that is something that will show up on your report as an inquiry. Basically, the financing company or bank or institution, when they go ahead and request your credit report, that will show up then as an inquiry on the report. And then public records. If you have anything on your report due to collections, if you've had a foreclosure in your history, if you've had any bankruptcy, that also does show up on the report and is something that is reviewed by the lenders. And then we have the FICO score. So the Fair Isaac Corporation, be honest, I never remember what what FICO stands for. So it's nice to have the acronym spelled out as well. So this just shows a breakdown kind of how that information is weighted on your credit score, to give you an idea and a picture of, okay, how does each of the things we just briefly touched on, how does that impact my FICO score? So I know if I'm trying to make changes, how can I have the biggest impact going forward when I'm making improvements to hopefully to that credit score. So payment history is 35%, amounts owed are 30%. So those two right there, that's 65% of your whole score. So if all you did was focus on those two items, that would have a massive impact on your score. And then to a lesser degree, there's the other three that also play into that score. So it's the length of your credit history. Think about how long you've had a credit card or a loan outstanding, a line of credit, how long you've had that credit open also plays a role into your score. Basically telling the prospective creditor that, how long have you had debt and how long have you then been paying it off, in terms to basically build a story, build a case that you have obtained debt in the past, you have the ability to pay off debt. That only boosts your profile as you're looking to obtain new financing. So credit mix. Sorry, go ahead, Eddie.
What you're saying is that you really need to go look at your credit report and maybe pull it up once a year under that free creditreport.com facility. Look at the three credit bureaus, which are Equifax, TransUnion, and Experian. You're going to get 3 different credit scores from each of those, and go back and build a case for either an explanation of these bankruptcies and so on. What happened? Was it a medical related one-time event? Or does this show the lender that over a long period of time, you just haven't handled your credit well? And if you don't handle your personal credit well, they're not going to give you commercial credit. And I think the last tip is that you made a great point about was, if you're about to go and look for a new credit facility or a renewal of your credit facility, please don't go get new credit cards, because it's going to lower your credit score, because as you said, every credit inquiry pulls down your score, correct?
Correct, and I believe it's that stays on your report at least a year. I believe maybe 2 years it takes for those new inquiries to roll off your report. So it does have a pretty long-term effect there. So that's an excellent point as well, to keep an eye out as to what you're opening when you are about to go get apply for new credit for your business. Great. Okay, so that then brings us to the next piece of the presentation, where we're talking about how we're preparing for credit. And this piece is going to be twofold. It's going to be talking about cash flow and how cash flow is important, why it's important, how it impacts your business, both currently and also on a go-forward basis, because that will be important, and we'll touch on that in a second. And also budgeting, and the cash flow piece of it and the budgeting piece of it really do go hand in hand. So when we talk about cash flow, as with any growing business, with any emerging business, particularly as you're at the beginning of your life cycle, and even all the way through, let's face it, cash is king. If you don't have cash, that severely hampers your ability to operate your business, to grow your business, to sustain your business. So at its core, when I continue to say cash flow, we're really looking at cash inflows versus cash outflows. So cash that I get in, and cash that I am spending, and cash that is leaving the business on a regular basis. So if we think about, regardless of what your business type is, cash inflows include collections on any contracts that you have. If you're in the retail sector, collections on the goods that you're selling. If you're in the service sector, cash that you're receiving for whatever services you're providing, whether you are a salon or a consultant or in IT, basically the money that you are collecting for the services that you're providing or the goods that you're selling. And then the cash flows, equally as important, and I just listed a few here. So payroll, rent, supplies, if you're employing any consultants, basically any expense that you are incurring as a business that's resulting in cash out the door. So we're going to jump into the cash flow statement in a second. But what I would also like to highlight and emphasize is when we're looking at cash in and cash out, part of what should be considered and is important as a growing emerging business, particularly in times that we're in right now, is taking a look at what are important and necessary cash outflows that are true investments back into your business. A lot of times, especially this time of the year, and October 15th was yesterday, so many businesses filed their final 2019 tax returns yesterday. One of the things we all like to look at is, how can I reduce the amount that I pay in tax? What can I spend before the end of the year to make sure that I don't pay more in taxes? We all like to do it. I hear from clients all the time about this, and there's a lot of times there's a laser focus on reduce how much I am paying in taxes. That's great. However, there is an impact to that. So if we're spending cash purely to just reduce the amount of taxes that we're paying, what are we spending that cash on? Are they expenses that are going to help grow the business going forward? Are they moving us forward from year one to year 2, 3, 4, 5 to really help grow and build a foundation for the business going forward? Or are we just looking for expenses to spend right now purely to reduce the amount of tax that we're paying? And that's important both on your availability of cash. It impacts how you're using your cash, when you need to use cash, if you need to have cash reserves to get you through some tough times. But it also has an impact when you are making the next step of obtaining financing, and you are going to financial institutions, you're going to banks and requesting, a line of credit. They're going to look at at the overall picture of the business. And if the bank sees that you're basically spending all the cash that you get in on a regular basis so that your income is essentially zero, that paints a picture to the bank and makes the picture less valuable. The value of the company appears to be lower purely from what the financial picture is showing. So and we're not going to touch on this too much today, but when you're obtaining financing, one of the pieces that you will be most likely required to provide to your bank is your financial statements. So your balance sheet, which basically just shows your assets that you have at a given date and your liabilities that you owe at a given date. Your income statement that shows how much revenue you've earned, what your expenses have been, and then also that cash flow, which is an important piece, because it's basically, there are three legs to that stool. It's your balance sheet, your income statement, and your cash flow statement. And your cash flow statement will also show the bank, how are you spending your money? Where is your cash going on an annual basis? That paints a picture for the bank to see kind of what kind of company you are, how you are running your company. So the next slide we have up here is basically talking about the statement of cash flows. And I don't want to get too bogged down on presentation necessarily. There's two types of cash flow statements. So if you were to have somebody come in, a CPA or consultant, help you prepare your financial statements, there's two ways to show it. One is called the direct method, and one is called the indirect method. And again, this is not a piece to focus too much on today. This is more just to give you the overall picture. So if you were to present a cash flow statement that showed the direct method, all that's basically saying is it is what the phrase says. It's direct. It's showing what cash have I received. So what have I collected on my accounts receivable? What have I paid out on my accounts payable, to get to what my net change in cash is. So year over year, if cash was $50 at the end of last year, and it's $250 this year, what are the components? What are the levers that I pulled to get to a $200 increase in cash year over year? The other piece that gets utilized quite a bit too is called the indirect method. And it's indirect because it's not directly showing cash in, cash out on the statement. So the way that you get to the activity that shows how you spent your cash in a given year is by looking at your balance sheet and saying the change in each of the balance sheet accounts basically gets you down and reconciles you down to whether you had an increase in cash or a decrease in cash. So what I mean there is you would get to the cash flow activity by looking at the difference between your prior year and your current year accounts receivable balance, or your prior year and current year accounts payable balance, and the difference in those two balances will show what your cash flow activity was.
Because the bank wants to see it. I mean, in the context of what we're talking about, sources of credit, the bank wants to know how you compared to the prior periods and whether you know how you compared to it. So just a quick interjection. From the standpoint of a small business being able to prepare this kind of information, you could do it by buying your own software, or you could have an accounting firm do the bookkeeping for you. What do you recommend, and about how much does that cost from either side? Small business.
Sure. Small business, the options out there are pretty, they've gotten better over the years. A lot of small businesses, what I typically see is QuickBooks, whether it be, there's an online version of QuickBooks, which has also gotten better over the years. It's not perfect, but it's gotten better over the years. And then there's the QuickBooks desktop version, which provides you a little bit more functionality, but again, it's not, not necessarily as accessible on the cloud. I don't have the pricing off the top of my head, but I can certainly share that with the group. But I will tell you, on the QuickBooks side, it's very economical for small businesses. That very often I see small businesses, especially as they're getting started, utilizing QuickBooks. It's very user friendly. You don't, You don't need to have an accounting background to go in and start using QuickBooks, which as you're a new business, as you're an emerging business, let's face it, there's a lot of demands on your funds. So being very smart with where the money goes is important. But utilizing a QuickBooks, for example, puts all of your financial activity in a software. So at the press of a button, if you are putting all your information, your cash receipts that are coming in, your expenses, whether it be rent, whether it be payroll, you can run reports basically on a real-time basis as long as the data is in there to say, what is my balance sheet, what is my income statement, and also the QuickBooks does, I believe, have the cash flow option too. So you can get a pretty quick snapshot as to what things are looking like, and that's important as a business owner because it gives you a real-time, again, to the extent that you have the data in there, a real-time picture as to where you are financially as a company. As you grow, then it starts to become how much time are you as the business owner or your management team spending on the accounting versus is it time now to potentially either outsource that to a certain number of days a week or a certain number of hours a week or month, what have you, or bring somebody in-house, whether it be at the bookkeeper level or higher up.
So I see it's $25 a month for small business for what they call Simple Start, which is track income and expenses, capture and organize receipts, maximize tax deductions, track miles, manage cash flow, like you said, run general reports, send estimates, track sales and sales tax, and manage 1099 contractors. So do you help them? Do you help the small business? Are you capable of helping them get it set up?
Yes, we are. Yeah. So that's something we can certainly help out as well. One of the things that we do is we have trial balance templates. So that's like the hardest thing to set up initially is really setting up a trial balance, because at the end of the trial balance is basically all the accounts that you have for the activity. So you have accounts receivable or payroll expense or rent expense, cash. If you don't have the trial balance set up properly, it's the phrase garbage in, garbage out. You're not getting the best picture that you can if you don't have it set up properly from the outset. So that is something for sure to be looking at as well. And the other reason that you'd want to utilize a software, whether it doesn't have to be QuickBooks, but QuickBooks, I mean, you heard extremely economical as you're starting up, that the very low investment to get some pretty powerful information rather quickly. It allows you to pivot and not only look at what has happened in the past, but to use that information and say, where are we going forward as a business? And it's nice to have that historical data in a software to be able to quickly run a report to say, this is where we're at. Now let's take a look at that and where do we think we're going to go? Where do we think, are we increasing our payroll because we believe we're going to have new customers, or we're going to have a larger volume of customer activity? That really, the historical gives you a base to start making decisions going forward, which the bank may ask you for. And we're going to get to that in a second on the budgeting side. We can go to the next slide. So we're going to touch on a little bit the budgeting and the projection piece of this, which the bank may require of you going forward, because the financial statements are great. They show a picture. They provide some excellent information to the bank. But at the end of the day, that's historical. That's the story of the past. And while that is helpful information and it does help paint the picture, it doesn't provide information as to where you're headed, especially as you are looking to obtain a line of credit, for example. It's important to be able to paint the picture and say, when you're going to a line of credit, this is why we are going this route to obtain financing. This is why we're looking to obtain the amount of financing that we are looking to obtain, because there's certainly discussions and negotiations that happen in terms of what size of a line of credit are you eligible for. And another piece of this is your budgeting and your projections. So at its core, at its basic level, the information that the budget provides is it's looking into the future. So it's showing some future projection or expectation for where you think the business might go. It's not perfect. There's no guarantees. you know, none of us can see into the future, but it does provide, I'd say it's an educated guess approach using data and using assumptions to see where you are going to be. So again, we just talked about how the statement of cash flows, that's historical. Now we're looking to the future. So it's important for the banks, but it's also important for you as a business owner to see, where do I think our business is headed? Where do I think we are going to need to make additional investment? And if we grow, let's say, if we think the business is going to double, what does that mean for us as a business? What does that mean for payroll? What does that mean for rent? Do we have to look for new space? And if we do need to look for new space, or we do need to increase our payroll, what does that financially look like for us? Where are we impacted? Or is there a shortfall, or is there additional investment that we may need to make, where maybe a line of credit is something that we need to look at to help supplement the cash flow on a go-forward basis to help finance the growth and the operations as you are continuing to move forward as a business. So usually, you know, you start with, what do the next 12 months look like? So what does next year look like in terms of budgeting? So you can start with a couple areas. One, what are our known revenues for next year? So let's say if you're a construction contractor, what are the contracts that we already have signed, that we already know we're going to be working on, and there are dollar amounts attached to those. We have signed contract agreements, whether you're a prime contractor or a subcontractor to a larger organization. In that scenario, you have data where you know, based on the contract, what our known guaranteed revenues are going forward. So that's item number one. Item number two would be, what new business is there in the pipeline? So what proposals do we have out there? If you're in a business that requires you to propose and sign contracts, if you're in a different business model, let's say a salon, for example, where do you see an increase in your activity for customers coming in the door? Let's say you do, we'll just keep it round numbers. Let's say you do 10, if you bring in 10 customers a month, but do you think that, we think there's going to be a 10% increase. So now we're going to have more than 10 a month. And what does that look like if we charge X amount for every visit? What does that increase in revenue look like? And then related to that, what are the expenses associated with being able to provide those services on a larger scale? And then the third piece of this, again, because this is a guess, this is not a guarantee, is what is the probability of closing new business in the pipeline? So let's say, in an environment where you have to submit proposals to get new revenue, take a look at how many contracts you are proposing on, for example, and what do you think the likelihood is that you close all of those contracts? And you would look at that to say, maybe in the past, whatever we've submitted, we've won 20% of what we've bid on in the past. That would help you kind of project, if we have 10 contracts out there, we think we can win at least 2 of them based on the dollar amount of the contracts that we are bidding on. What does that potentially look like for revenue coming in the door? That doesn't mean you're going to win that work. That just means you're projecting that you may win that work going forward. Or if we put the contract piece aside, if you're in a service business or any business that doesn't require contract work, for example, what is the probability that you increase the level of activity, the level of revenue from a year ago going forward? And that could be, you can use historical information to look at that. So for example, let's say the last quarter of the year, so October, November, December, you started to see increased activity from a year ago. We said, well, based on this, we think this trend is going to continue. So this is why we think that revenue is going to increase next year. And therefore, because revenue is increasing, in order to help continue that increase, we think we might need a line of credit. So that's how this all kind of plays together here. So I just want to make sure we don't have any questions yet. Okay, and then the other side of this is cost, and I'll close out here because I know we're going to move on to Eddie as well. What are your known costs? So there's certain pieces of the business you have every year. Rent, labor, those are probably two of the biggest ones. You have those. You know what the dollar amount is. In the case of rent, you've got a signed lease agreement, so you know what expenses you're incurring there. You understand what your labor costs are. So then you move on to the next piece. Okay, so we know what our known costs are going forward. Where do we anticipate we need to increase those costs? Do we need to hire somebody new? Do we need to give some of our people raises? Do we need to build in a bonus for some of our people to help them stay incentivized and continue to work with us? Those are costs that you would look at going forward as well. And then, I just actually touched base on the last point here somewhat. So salary increases, let's say you have to bring in a new executive or a new management member to your team. That could be a significant investment. So you'd want to include that in a budget to say, well, if I bring in a management level person, this is the impact and this is what I think it's going to cost me going forward. What does the business look like once I bring that person on? Signing a new lease example as well. So in terms of the mechanics, typically, for a small emerging business, you're probably just going to use Excel, and you can use Excel in all sorts of different ways. You can add formulas rather than just pure data entry, and if you add formulas to this document, where that's nice is you can kind of push and pull the different levers of the budget and say, I think we're going to have, $50,000 of revenue this year. What happens if I think it's 60,000 or 70,000 or it's lower? So if you make it as formulaic as possible, that is something that could be very helpful to you as you build this on a go-forward basis. I believe that's the last slide.
But maybe not your last comment, just your last slide. Don't go away. So friends, you just heard from a career CPA who's been in business doing this for 16 years, almost 2 decades, what you need to do to clean up your act before you go to a bank to ask for money. And shame on you if you don't listen to his advice, because it would have cost you a couple $100 an hour if you had to pay for it. And you probably would reduce the probability of getting a yes if you don't listen to what Kevin just said. They were great points, really.
And also, Eddie, the amount too. I mean, it's not necessary. You may still get approved, but not nearly at the amount that you expect or need.
Exactly.
Yes.
And know where you're going. You need to understand how to explain the assumptions associated with the business plan. What were you going to say, Miriam?
Oh, no, we actually have one question here for Kevin. Is there a pro forma for developing real estate that you would recommend? This person's just starting out and will need to prepare for one for a new project.
Is this to buy real estate, to build?
I am waiting for the answer here.
To build, sorry, I see the answer, to build.
Perfect, okay.
So I personally am not in the real estate sector, but I can certainly reach out to my colleagues to find that out for it. I'm sure we do, because we work as a firm, we work in the real estate sector as well.
There are a lot of great models out there, and so we're very fortunate to have a number of commercial real estate development companies in Prince George's County. Many of you know that Bozzuto was located here, and they're certainly a large developer of property, and I've seen many of their pro formas. It just depends on what you're doing, what you're trying to develop, and where specifically, because each product type takes a certain amount of time. You would guess as to how long it might take you to get through for approvals and things of that nature. So it also depends on the underlying property. But I think if you called somebody at like the Michaels Company, which is now part of a much larger group, and you asked one of the commercial brokers if they had a model, that there's probably an Excel model out there that they'd probably share with you for something like that. I know there's some professional ones that the people like JBG Development use and so on, but those are really expensive. And if you're a small commercial developer, a good point, by the way, is that if you're coming to FSC First for a 504 loan, which provides a long-term 20 to 25 year very, very low cost as far as interest rate loan at 10% down for an existing building, probably 20% down for a new construction building, we would ask you to give us that kind of a pro forma. So that's a good point. I'm going to jump into this last slide that we had and sort of go off the slide for a second before I come back to it, because today's discussion was about sources of credit. So with sources of credit, everybody knows that you can always go to your friends and family. And that's probably the first place you go because it's the easiest path to get debt. And then you hear about entrepreneurs who have to bootstrap their companies with more expensive debt, which is using it off your credit card lines. And you know, that can be anywhere from 12 to 24%. It's expensive, and you have to be careful because, as Kevin talked about, your credit score and how banks look at your credit score. If you use over 40% or 50% of the available line on any given credit card account, it's going to knock you down 10 points on your credit report. And if you use over 60 or 70%, I believe, it knocks you down 20 points on your credit score. And so let's say you were going to refinance your home, you had a 680 credit score, but you went and exceeded one of your credit cards, and all of a sudden now you're down at 660. Guess what? You don't get the best interest rate anymore. You're going to get charged a higher interest rate for having a lower credit score. Banks used to look at 680 as a great score, but now they're looking for people to have a 700 plus. And so you have to really, really look at your credit report to see that, you know, you're prepared before you go in. So before I go to conventional financing, other areas of lending that have become very popular thanks to the internet are peer-to-peer lending, which is online through companies like LendingTree and Credible. You can get anywhere from $50,000 to $100,000 through them. And those are people that look online and say, oh, this looks like an interesting opportunity for me to invest in. I'll take a shot at this. And so they share, groups of people share in those loans, and they've done okay in terms of opportunities. And then there are crowdfunding lenders as well. So the one, you know, there's one big one where people go for sort of nonprofit and outstanding medical bills and other types of calamities that may happen to people, GoFundMe. But there's also Kickstarter and Lending Club and Indiegogo, and those places that you can go where you may repay based on debt, you may give away equity. Some of them are people that are developing products and they need the money up front, so you get in line, you get one of their products, you're literally buying a product early on, but they're getting an advance from you. And then you have your commercial lenders. So at that point, you know, if you're at a certain stage, you can go to a local bank. I like the local CDFIs, the community banks and the certified development financial institutions. I think if you're going to have a long-term relationship, they're the best places to go. And believe it or not, M&T is considered to be a community bank, even though it's so big. And it's a great resource for you. I've had many, many customers that went to M&T and that worked with M&T. We at FSC First have 12 banks in our loan pool, and we work with each of them on different types of areas that they enjoy lending. In other words, even if it was some of the programs that help mitigate lending, like the SBA loan program, which takes some of the risk off the lender and gives them the incentive to make a loan that they might not otherwise do if it wasn't for something that the SBA was doing to enhance the credit. These banks, some banks are expert in hotel lending, some are expert in restaurant lending, some are expert in brewery lending, believe it or not. Some are expert in just professional services, like, for example, a bank that understands, an accounting firm and what it takes to be able to lend money to an accounting firm, and what the ratios should be, and what their position should be in comparison to others in the marketplace. So those are really good places to go. Now, there are also advanced organizations like Square, the credit card group, and others. I really don't recommend them. They're very expensive and they cut into your cash flow tremendously. And it's very hard to deal with people like that. There are hard money lenders. There's several of them in our area. If you're looking to buy a piece of property and you need to get it quick because it's for sale and you want to get control of it so you can go in and get your drawings done and then go to the county and get permits and get approval and work with the utilities to get your sewer and water and electricity to the site so that you can move forward with the project, sometimes that requires a lot of time. And so you go to a hard money lender and they may give you 50, 60, 70% of the money, but they're generally charging 2 to 6 points and 12 to 18%. It just depends on how they balance it. And after that, you can look at some other options online and see what you think. When you look at some of these areas with crowdfunding, you got to remember there's the equity part where, like I said, you're selling the shares. There's just the debt crowdfunders. There are the rewards, the people giving you some kind of reward for it. And then there's just the donation component of that whole business. So let me go to my points. That one, I agree with Kevin wholeheartedly that when you go to a bank, your tax return needs to show a positive net income. People who are trying to balance to a zero revenue, so that, not revenue, but to a zero taxable income, so they don't have to pay anything out of pocket, are basically telling the lender it's not a profitable business. If you're not paying taxes, there's no profit. That's not a really good thing. Make sure your equity contribution is in the bank and seasoned. So what does that mean? That means that when you go to a bank and they say you have to have 10% or 20% down, they want to see that you have that cash, that the cash is in the bank. And by the way, by law, they have to know their customer. So they have to look at that money and have to determine where that money came from and whether it was really money that you could have possibly earned based on looking at all your financial statements and tax returns historically and what your expenses are and so on and so forth, or if there may have been some fraud in the way that money or criminal activity in the way that money was put together. Banks always love to see a business plan. People need to be able to say, this is my plan. And even if that plan changes from time to time, which is a great idea, at least you have some roadmap that tells the bank you've thought it through. Here's your projections. Here's the assumptions that are defendable that you can speak to in front of a loan officer and say, well, the reason why I said we could have so many meals per day is when we had to move the table 6 feet apart, we could only accommodate this number of seats, and we're not going to fill them up 100% all the time. And so that's how we got to that. And you need to be able to let them know that you were conservative in the way that you created your assumptions. And if you want to create a more aggressive one, at least show two. Show the conservative and show the aggressive, so that they know that there's a realistic understanding of what you think you can and can't accomplish, because what they're looking at is they're looking at your debt service coverage. Can you make the repayment? Any source of credit in general, unless it's an equity group, wants to know what your source of repayment is. And then guess what? The equity group wants to know your exit strategy. So even though they're not looking at what a debt service coverage ratio is, at some point they want to know they're going to get their money back and they want to be able to exit. So another point is that if you're going to build a hotel and you're telling us you have the expertise, show that you have the relevant management experience in the kind of property that you're going to develop. If it's full service, you need to show that you actually worked, managed in a full service environment. If it's limited service, so on and so forth. If you're going to operate a restaurant, please don't go to a bank and tell them, it's my dream, I've always wanted to do this, because that's just not going to fly, especially today. It's very, very difficult, on a normal day before we had COVID-19 to run a business. and it's even harder with more challenges now. And make sure that you don't have just one single revenue stream. The pivot strategies that we were talking about before mean you look for other alternatives and you have multiple revenue streams, so that if any one particular revenue stream, like indoor seated meals, was impacted, that you have other curbside pickup, delivery, mail order, whatever it may be, selling through retail stores, etc., that can pick up the gap, and also make sure that the business is credible and that it's an ongoing business. We always look to see if it's an ongoing business. Is this a business that's going to be able to maintain itself now and through all these different challenges? And then make sure that when you're getting prepared to go to the bank, that you've seen someone like Kevin, that you've got your financials ready, that all your tax returns have been filed, and please, unless there's some amazing reason why you can't file, don't walk into the bank when you've only got an extension for last year. They need to see the numbers, and they need to know that you've seen the numbers and that you know what your history was comparing to the prior period, and that you've seen the interims and you know what that's going forward, which is what I refer to as interim financials. What Kevin said was your income statement and balance sheet for the current periods right now. You should have it on a month-to-month basis and be able to see how you're doing so that you can guide the ship. Any more questions, Miriam?
Eddie, no, no more questions at this moment, but I will keep an eye out for you.
Good. Kevin, do you have anything to add? Because that about wraps up what I had to say for today.
Sure. Yeah, I just echo Eddie, what you said about, you know, to have monthly financial statements and to have those financial statements and associated plan ready to go, regardless of whether or not you go for financing. Those are just important cornerstones to operate your business successfully as well, because it gives you the information as the business owner to pivot and make decisions as to what you need to do to not only sustain the business, but also grow the business. So it's not just purely to get financing. It's an important piece to just running the business as well. So, you know, just wanted to echo again what Eddie said, that there are multiple benefits to providing and preparing this information, both financing and management of the business.
Well, I don't see any questions. I think the last thing I would say before Miriam closes us out, maybe she's got questions for us, is that you're very fortunate if your business is located in Prince George's County. We have numerous resources for you as an entrepreneur to be able to reach out and obtain information to help you run and manage your business, and to help you gain additional expertise through places like the Bowie BIC and FSC First. We're more than happy to assist and guide and direct people to professionals like Miriam for lending and Kevin for accounting and other financial services, to be able to help ensure that your business survives all the ups and downs of what happens in business cycles.
Well, to close it out, and just my touch points or things that I kind of took away. Kevin, thank you so much for sharing your expertise with us. Everything that Kevin has stated, I can attest to as a business banker. It is so important for you to have your financials together. We analyze those, and it's even more important to have a strong CPA like Kevin, and a good accounting system like QuickBooks. So we really appreciate your feedback there, Kevin. Thank you so much. Eddie, thank you for your time and sharing your wealth of knowledge with us. And, you know, Eddie is so right when he says that bankers absolutely love the business plans. And I can attest to that too. It just helps us paint a better picture, especially when it comes to the underwriters who don't get to know your beautiful businesses. So it's really important for you guys to be able to provide us with those business plans. And thank you for the M&T shout out. We appreciate it. But thank you again. Are there any last questions before we close?
Monique wants Kevin's information, so let's throw up the last slide.
Yes, please.
There you go, Monique.
Awesome. So on this slide, you can find Kevin's and Eddie's, and also my information, email addresses. Please feel free to contact any of us. We'd be more than happy to help you in growing your business and provide you with feedback. And I think I will leave this up, but I think that wraps up the presentation for today. Thank you so much for attending. Eddie, Kevin, any last words or statements?
Just one more thing, thank you very much for inviting me to attend. Very, very gracious that you had me on. And one quick thing that Eddie mentioned about community banking, I couldn't agree more. That the community bankers are in the community. We've especially seen that in the last 6 months, the importance of community banking. And so utilize those resources that are available right in your backyard, because they're vast and they are available.
And thank you again. Thanks for having me. It's always a pleasure to help share some knowledge and help our local entrepreneurs. I would suggest that anybody that's interested in taking a look at the various different loan programs that FSC works with, to take a look at our website, fscfirst.com, and you'll find a subsection of where you can see each different loan program, including the 504 loan program, where we would work in conjunction with a bank like M&T as our first trust lender. We would facilitate the second loan and go forward. But there's so many other loans and programs, mostly with regard to supporting job creation in the county. Have a great weekend, everybody, and stay safe.
One last reminder, there are 4 more of these sessions. Again, they are great 1-hour investments to make for your business. So please join us on October 23rd for Source of Credit, October 30th, Understanding the Lender's Language, November 6th, Contract Financing, and November 13th, Pivoting to a New Economy. Thank you all so much for joining. We appreciate it. Have a good day.